Hey everybody, welcome back to Trading Price Patterns. My name is Mike Fairborn. It's good to be with you today. Sitting in for Rachel Deshelle, who is out. Expect to see Rachel in though next week. Does a great job in this class. Really encourage you to continue coming to the class. Today, folks, I wanted to really talk about, pattern. We've seen a lot of patterns within patterns, but there are a fair number of breakouts and a number of setups across the board. Daily charts, weekly charts, and yes, intraday charts that are going to tie into the daily time frame as well. So a lot of really fascinating kind of setups here that we're seeing as we're seeing a little bit of a resurgence of oil prices coming up, a little bit of a resurgence of the war between Iran and the U.S. as well. So still some potential sector rotation. You're going to see some new companies out there in terms of breakouts and potential setups. And so with that, looking forward to diving into it. Now, I would like to welcome all of you here today with us. Oh, there's my chat right there. Perfect. The one that you have on your screen there. But hello to you. Yes, a happy hump day. It is. It is Wednesday today. Hello to you, Jenny Michelle. Good to have you here, as well as Roderick, Richard, Sharon, Robert, Scott, Aloha, as well as Riceberg and many others, David, Austin, Olga, Michael, and others. Good to have you on board, folks. Any questions, comments, throw those in the chat. We do have Brett Crowther here with us today. Appreciate Brett being here. You see me in the chat as BC. So I'll try to keep an eye on the chats as well. But thanks for stepping in, Brett, and helping out there. All right. Well, let's do this. Let's hit some disclosures so we can get the show on the road here. Now, folks, as it states here, options carry high level of risk, not suitable for all investors. Information here is for general information purposes only. Paper Money software application for education purposes only as well. Now, with long options, if we go into options today, investors may lose 100% of the funds invested. Spread trading must be done in a margin account. Investing itself does involve risk, including the loss of principal. Some additional points listed below there as well. Okay, some other key points as we do take a look at maybe some stock examples today. There are risks associated with investing in dividend-paying stocks, including but not limited to the risk that stocks may reduce or stop paying dividends altogether. Short options can be assigned at any time, regardless of the in-the-money amount, that is the ITM amount. Now, there's no risk that the execution of a stop order will be at, there's no guarantee. Let me state that again. There's no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. So having said all that, let's go ahead and get started with a number of price patterns today. Many of these folks, like I said, you're going to be seeing, really options, I should say, patterns within patterns and kind of going across the board there. Now, as we take a look at what we've got here, just a quick note on the S&P 500 index. Speaking of patterns, here is a pattern that is still kind of just dragging and setting up a little bit. We had sold off a little bit more, earlier in the day, as you can see right over here. We did dip. I'll just show you. There's a little bit of a candle, a little bit of a hammer type recovery here. And we've been seeing support really kind of lining up near that Ford, actually about 7,400 level, as you can see right over here on the right-hand side. So about 7,400, a little bit of a pause there. This pause tends to mirror very much the apex of the triangle. In other words, where the converging trend lines, one off the top coming down, one off the bottom coming up, where they do merge right there is the apex, and that can create some support or resistance depending upon where we're at. But you can see right there, there is a lot of activity. It is quite interesting as we are nearing the end of the month. Now, I've laid this out upside and downside in terms of the potential for a move to the upside using this range right there. That's the range we're using, which is the highest really range between this triangle pattern. This is a really classic Elliott wave type triangle pattern. You're getting lower highs and higher lows into a 1, 2, 3, 4, 5, or as Elliott likes to call it, A, B, C, D, E setup right here, sitting up right in this range and just waiting for a move. Now, one of the things we have to say, we are getting some interesting rotation. I'm going to quickly just go over here into the EW, just add EW to the SPX, S&P 500, and there you go. What do we have? Fresh, new highs as of yesterday. We had a three soldier up, one, two, three to the upside candlestick move, and we're kind of consolidating there. Folks, this is very, very strong and very sort of trendy here. This represents all of the little blocks that we're so used to seeing here, right? In the S&P 500, getting outside of, these little blocks over here. Some of them aren't so little because in reality, the S&P 500 is market weighted. But if we put all the blocks the same size, I don't know, maybe like BX or whatever, uh, that is what you're seeing on the SPX equal weight. That is the symbol again right there. And it does give us a sense of broad-based development, broad-based strength across the board in the S&P. So in other words, when we're seeing pullbacks in the technology group, and really that's coming, it's really the AI trade, semiconductors specifically. We saw overnight, actually ended up being a little bit over 9%. The Korean Kospi dropped. HK Hynix, the big semiconductor manufacturing firm over there, down substantially. Today, I think the Kospi was down just about 3%, but that has been leading into other areas dropping, but it's nice to see that there is broad-based strength. And a lot of times you need that market breadth for the trend to go higher. Remember, the Mag 7, highly tech, I mean, and the tech side has been noted for accounting for about 47% of the movement of the S&P 500 over certain time frames. In my book, that's darn near half. I mean, it's half, basically half of the S&P 500 in those seven stocks. That's that market weighted nature of it. Now, if these can recover, if these can bounce back, it could be very interesting. Super quick note, because I do want to get into a lot of price patterns here. Just a brief view of the seasonality chart. I'm going to take us to a 10-year, and I did that again just by going to style, selecting under chart mode, not the standard, but the seasonality mode, and I've got to make this comparable. So what I'm going to do is go into my price axis. I'm going to make sure that we're looking at this as a percentage, so that we can compare prices that were a lot lower 10 years ago to where they are today and try to depict the seasonal nature of this movement. In fact, over here, you can see this is January through D for December over here. Uh, Generally speaking, yeah, from July to mid-August to the end of August, they refer to that as the summer rally. Now you'll notice that there is a little bit of a dip here, which is interesting on a 10. Oh, I'm on the SPX EW. You can do it on whatever one you want to look at. I really want to look at the SP. That's fascinating though, on the EW. I don't think I've ever done that before. You'll notice though, the dip here is already taking place early. You can see a little bit of a pullback here towards the end of July, first part of August. We've got that already. We've actually come down already. Again, the red line is the average of the S&P 500. Sorry, I wanted to state that. Over the past 10 years, 20 years, 50 years, folks, it looks very, very similar to this line right here, moving from the first part of the year to the end of the year. It's just in an upward move, generally speaking. Now, it's made up of a lot of different lines. Some are down, but on average, this is what it looks like. And so as you see this, where are the peaks? Could we break out of our triangle here? Well, there tends to be a little bit of a rally mid-August to end of August, usually referred to as the summer rally, when in fact it does take place. It doesn't have to take place. Of course, nothing has to take place in the market, but on average, and that's really the key word, that's what can happen on average is we might see a little bit of a boost. You can see the pullback, can't you? Right there. See the pullback in August? We're actually pulling back already, and we might bounce early, but we might not bounce at all. All I could say is we're on a sort of similar trajectory off bottoms, and rallying up. A quick note, this pullback in the market puts us back to, you see where we are right here? We're now almost on par with average market movement. We're right back into that range. So it is interesting. We were clearly above it over here, but we've pulled back down. Kind of you'd have to say, a mean sort of recovery back to the average seasonality, right? A pullback to the average or a pullback to the mean. When that happens, we might actually see a bounce. We'll see. We'll see what happens, but it is still fascinating to keep an eye on. Now, we've got to look for a lot to look at today, and it's not just the index. Although, last thing, NDX right there. kind of a bigger pullback. Where is the support on the NDX? Well, it's a little ways down. It's about 26.5, about, you know, actually 26,500. Right in this mid-range right here is where we could see a pullback, at least in terms of where the triangle suggests that the downside could move down, could initially hit. We don't know if it'll hit that. It is interesting. The upside is much higher over here, but that's clearly a breakdown on those semis breaking down. And by the way, as you're getting close to that 2600, look over here, prior highs as well. Now, do we know we're going to go to that level? We don't know that, but we can say that yeah, I mean, maybe it's overdue. Maybe it's ready for a little bit of a bounce. What I'm going to do real quick, because this could put sort of the trajectory of the market back in line again. We could be looking at a downward move here. I mentioned to you, though, if I summarize and just state NASDAQ 100, S&P 500, the big movers really are the Mag 7. So I have this saved over here. It's one of the capabilities of the Thinkorswim platform. Here is your Mag 7, and this is the Mag 7. Now, there is an ETF for this. We don't go into ETFs in this class, but you can kind of make one sort of here. I mean, just by adding them all together, it's a great tool. I think many of you have probably done this before. But you can see on the Mag 7 here, what I would be interested in is, I mean, I think many traders might be, is if we start to break out here. In other words, we are at a higher low, and we could see some force in the market going higher here. Higher low, higher low, higher low. You can still see it's a bit of a longer term kind of consolidation. But if we start to break above here, could that get us started in the summer rally? Well, it could certainly give the markets a boost because we know market weighted level. It could add a lot to it. And there are the 7 right there. Some might even throw in Broadcom in there, AVGO. But what I want to do is tap again into the capabilities of the platform. I'm going to right click just above these highs, create alert. Now I'm just going to say just something like this. So it texts me higher because this is going to be my driver. Hang on a second. I didn't do that right. Just a second. Let's do that again. At or above um, this level there. Is it forming it? It did last. Okay. Maybe they pulled something on this. I've got it set to the mobile right down below here. I might have to do something a little bit different, and that's okay. But look at this. They're not doing it anymore. Okay. It worked the last couple of weeks, and I was kind of surprised, but they were actually letting us put alerts in on all these. Not anymore. That's gone. No problem, though. All we need to do is highlight this and go back into NDX. And that's going to give us virtually, I mean, something very, very, very similar to this. Okay, so NDX, NASDAQ 100. Let's put an alert just on a single symbol here. Now, it does represent a lot of those tech stocks behind the scenes, but I want to know if we are breaking above like, this range here, that 28,000 level. I'm going to right click and I'm just going to go click create alert. I'm just going to say higher question mark and see if we can get a text coming in here. Now, if this doesn't work, it just tells me the alerts are down and we'll just move on. But make sure you come down here under notify with, click on send push notifications to the mobile device. And that does work. But as you recall, well, if you're in my swing trade class, we have been using that that long version of the Mag 7, and it was working great, but not anymore. So there you go. We don't know what that is, but we used a pretty good comparable here in terms of a very heavily condensed index with technology. By the way, a quick note on this. As I mentioned alerts here, just a quick note. Alerts aren't guaranteed to be delivered or delivered at any specific speed or time frame. Should not be used as a replacement for actively being aware of your positions. Okay, there we go. Wanted to hit that. Now let's get into some setups here, potential patterns that we've been looking at. This is one, by the way, that we put on in the swing trade class. Apple had been showing strength. Now, a lot of the price patterns that I look at, I know Rachel looks at these because I do chat for a class. She does a great job. But that's this. If you come up top and you kind of go sideways over here, that's generally a positive thing if you're coming up to a prior high. And we caught that right there. We put on a partial position there because this right here, folks, can represent the beginning of a bull flag. In other words, the pole of the flag right here. Strong upward move with the underlying trend on our side. Sideways move, pull back. You got a little bit of a dip here. We added to this position. You can see that that is our target up top. This target is simply the flagpole going up, measured from the base or the breakout of the move going higher. That puts us right about 350-ish. So it's this. It's just a move up. This is our measurement leg, and we take that off the bottom and measure it to the upside. I've just kind of eyeballed it here, but that's what you're looking for in terms of a flag type trade. Now, some traders too, more aggressively, and I've seen this pattern hit a lot. And that is you take this move and you take that length and you measure it actually off the high. Gives us a little bit bigger range to the upside where that price could extend to, but I've seen flags drawn in a couple of different ways. That's one that's getting close to it, close to the move right here. Now, here we go. EXPD. Getting into some of these. Now, here is a pretty big move up on EXPD. Now, we are in the midst of earnings, and you need to be mindful of earnings for sure. But you can see over here a little bit of a flag kind of coming in just like that. Um, the flagpole coming up, excuse me, the pole, the flag itself coming down, and then the possibility of a breakout here. Now, what a lot of traders might look for is they might look for basically a close above the high of the low day, like a hold to happen right in here. Trend line break coming down, a hold, a moving average crossover to potentially signal that maybe it is a flag, maybe the flag itself that we think we're seeing is on the verge of actually getting started. Now, I put this one up here because a lot of times these flags, and I said patterns within patterns or patterns within really good technical strength. See this major high over here? Coming back down and touching off this level, there could be a higher level of support right there. In other words, there could be a bounce potential to come up right over here. And that's something we'd want to keep eyes on too. But I'm just saying, you can try to get flags near the bottom, or you can get those that have already shown some pretty good moves to the upside here. Oh, thanks, Robert, for putting that in the equal weight there. Um, there is one for the NASDAQ as well. It's interesting too. Uh, that Sharon had too, for the equal weight. But the equal weight on the NASDAQ 100 is very similar just because it's so tech heavy. About 68% of the companies in the NASDAQ 100 are tech, so it's not as much, but I appreciate you putting the Dow in there just to find the equal weights there. Yeah, just to see what sort of trends we've got. All right, let's go ahead and continue on here. Now, here's Honeywell. Honeywell's a little bit interesting too. I'm focusing on some of the shorter term flags first. This was also a break. Now we're kind of resting near this range over here, but you'll notice just below we have some prior highs, which can help to maybe bolster some of that support as we've shown some strength to the upside and some consolidation right near the 240 range right here. So this is a post-earnings rally. That was the earnings event. It was strong enough to get us above those highs, has dipped with the market a little bit, but watching a possibility of a bounce here could be interesting. Now, this is where I'm going to dive on into some of the intraday activity here. When you have a 2-day pullback, a lot of flags, what traders are looking at. Not everybody looks at this way, but some of the stronger flags are maybe 2 to 5 days. Here's a good case in point right here after a really strong rally on Honeywell. Look at that pullback right there. 2 to 5 days. Yeah, I think we had like maybe 4 days in there. Yeah, I mean, 4 red candles pulling down, but look what ensued afterwards. A beautiful flag that measured the distance of the initial pull. Strong moves, and that's where it comes in. Sometimes the strongest patterns uh, will or follow-throughs come with the shorter term bull flags, 2 to 5 days. How do we get more information here? Well, I've set up my charts in a grid format, daily. Did you see the 30 and the 5, the daily minute, 30-minute, and the 5-minute. Now you can use a lot of other time frames. Certainly there's an hourly time frame that's very valid to use. Gives you an hourly breakdown. 15 minute. Some people go as low as a 1 minute. These are the ones I've just chosen here to take a look at. So I just click one arrow over to the right, and now I can really look and say, ah, interesting. I get a lot more data on a more minute time frame, folks. And this can be very, very helpful in anticipating a bounce right there. 240. Now we can see it pretty clearly, right? 240, 240. We're coming up right here. What are some of the things we might want to see on this shorter term time frame for some insight? Well, I'd mentioned, a close above the high to low day. Now we're getting that right there. I should have said close above the high to low bar. It's a 30-minute bar. These are not daily bars, but you can see we got one right here. Could this be the start of a run? It could be. It's bouncing off support. Other traders might say, well, what about the 10-day moving average or something to get us going? Are we breaking above that yet? I'm going to go ahead and flip that from a 9, which is the default, just to a 10 so we can see this a little bit better. Oh, let's get to it. There's 10, tab through, number lock. There we go. 10, tab through, tab through. There you go. Oh, we're not quite there. Now, some traders will use this as a guide for what they would anticipate is more, they might have more expectation that this is getting ready to go if in fact it can break above this level. But what makes this so unique is we're building a pattern within a pattern. Remember, this was the strong upward move resting near prior longer term highs, maybe bolstering that support. We can see now on the shorter term, different time frame, we can see right down here. You can see maybe patterns within patterns or just within different time frames as well. The possibility of a bounce there. So just totally for fun, let's do this. I want to go back and see this. Can we go back this far? What is this? April. Let's see. How far can we go back on a 30-minute chart? 1, 2, 3, 4, 5. Oof, we might have just missed it. Dang it. I think we can go back. I wanted to just show you this so you can see this on a intraday 30-day. I don't know if I can do the 30. What? Let's see. Aggregation period. Uh yeah, 30-day, and then I wanted to, oh, never mind. You got to go like this. Oh, we can go back. Look at this. We can go back 360 days on it's a 1 hour. Fine. We can't do it on a 30-minute, but I just want to highlight this range just to show you what this looked like intraday by contrast, by comparison here to see what we've got. So I'm going to take us all the way back to the 26th. It was right over, there it is. This is what that looked like, just so you can see it right there. Okay. And we are seeing some intraday activity, but do you see here? Somewhat similar, not identical, down, up, down to the same level. You got a move coming up right here. Now, hang on a second. That's one I can see here. I'm going to make sure though, just a second, folks. I'm going to jump back. I do like to see these, and I do this all the time. That's the 20. I think I might have been, no, that should have been it, I think. Let's see. So it's January, right around here. Yeah, that was it. But did you see it? It was something similar. Do you think we might have had a moving average come in there? So super quick, let's just go back to it so I can highlight this. Got to go intraday. Okay, I'm going to go back out to my 365 days because we're just over 6 months. The 180 is not going to cut it for us. You got to go to 360. Let's go over to it now. Where are you? There you are right there. Just confirm. Yep, this is the time frame. I thought so, and I wanted to confirm it, but right over here. So go into my time frame. There's my 10. There it is. Perfect. 10-day moving average right there. Okay. Kind of bouncing, 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 breaking above it right here, but really breaking above some prior highs too. So just interesting to do. It's so nice because we have this platform right at our fingertips so we can go back and look at prior time frames. Now, even if you go back and you look at back testing or whatever, you just look at different scenarios, it's never the same, right? It's not guaranteed to go forward, but it can be somewhat similar. Anyways, folks, that was Honeywell. Speaking of the Dow, that was mentioned in the chat earlier. Here's another one. Look at this. Now, this is one that has already um, actually broken out, as you can see right here. So this could be sort of a longer term. See the triangle? Broke out to the upside. You broke above some highs right here. So I have here for us on this Agilent Technologies a couple of price projections. The first one is going to be off the bottom like that. That's your flag. The next move up, let's see, this is 110 to 140. So about a 30-point move. If I go ahead and just do another, roughly 30-point move over here, it's about there to about 55. So 25 to 55 right there. Yeah, looking at about, and these look about comparable too. That could be a target. What's interesting here is we're getting strength within strength, maybe a pattern within a pattern. Here's a longer term flag, folks, and here is the shorter term flag that did what? Okay, now it doesn't have to act like an apple did, but it's a very similar type setup to what Apple did. It made its high, ran down, you ran up here and just went sideways. Now, generally speaking, a lot of technicians would say that is favorable price movement. And why is that? Well, we are holding above what was resistance, and we're just dragging. So the flag pattern here, short-term flag could be valid. And so too, I'll switch colors here. The longer term flag could also be valid. Remember where that longer term pattern takes us to? 155. Oh, prior high. How many times have we seen that? The flag pattern will terminate near the high end of the range. Maybe another level of resistance there too. But this one has been breaking out and holding. So I realize there are earnings, and this is after options expiration. Options expiration for August happens to be the 21st of the month. This is 26th, so it's past that time frame. But this is kind of an interesting one, already flagging and a breakout. Let me just real quick, we'll just throw it. We'll add in here another APL to it, and I'll just highlight it right here. Not perfect, not identical, but can you see the prior resistance? Down, you're up, and you're just sitting there. We had within this too, another flag pattern developing within a larger one. Patterns within patterns. Sometimes, traders will look for those, but that is Agilent. I'm going to add a position here. Let's go ahead and put one on here. It's $140 stock right now. And a couple of different ways we can do this. These are some of the ways we've been doing this in the swing trade class. Is we might add a half of the position on here and then another half of it breaks out above a range, and we can still use alerts, another capability on the platform to maybe help us in that regard. But let's do this. We're sitting right here, still, some time ahead of earnings. Last earnings, by the way, were very good. Big gap there. But let's go ahead and just do this right now. So I'm going to right click. We'll go on down to custom alert, OCO bracket. That's perfectly fine. Good till cancel over here. And let's line these up right over here. And let's take a look at this. I'm going to go ahead and set this up at this is actually a 155. Remember the upside target? We can adjust the potential exit level in the form of the stop that we'd already discussed here in a bit. Let me just highlight these. Always keep an eye too. Make sure that that dialog box makes sense to you. Right now, though, we are putting on a half position size. That is 50 if somebody was looking to put in a full round lot of shares, 100 shares. There it is right there. So we put it in, there's our fill. And what I'm going to do is I'm going to keep that stop very close to this level, maybe just below that low range over here. And there is our target, right upwards near 155. Now, here is my alert. If I begin to break this level, create an alert, just let me know. Notify me via text, higher, question mark, or, higher. And then this is the message to myself, add to position 50 shares. So I get that text or I get that email. Again, to set those up, go up top into setup, application settings, and in your notifications tab, You can set up both a text message, which I use, more than my email, but some of you do have emails popping up quite fast as well, which is great as well to do. Hey, folks, if you are getting value from this presentation, do me a favor, just smash that like button. That is if you are getting value. I want you to get value before you hit that before you hit that like button. But yeah, I encourage you to follow Brett and I on X as well. That would be Brett Crowther CS. I am Mike Fairborn CS, where we do post content on X, financial related content. I've got some to post after today's class as well, some patterns and some updates as well. But also encourage you to subscribe to our Trader Talk channel. I'll pull that up right now so you can see that. Love to have you on board if you're not already. In fact, I'm going to put this link into the chat so you've got it here right there. And if you're not subscribed already, love to have you on board. You get all this great access to our playlists over here. You can come down here and check out those playlists. A lot of different coaches, and there you go. Love to have you on board. We have, let's see, what do we have? 200, and I like to watch this. About 207, well, just over 207,000 subscribers right now. So love to have you if you're not already there. I know many of you are, and it is great to have you all on board. All right, let's hit another flag. We've got more to hit. I'm going to kind of ramp up the speed a little bit here. Wanted to get that one under our belt. Just going to look at one here. Here's another one, PanW or Palo Alto Networks. Do you see the possibility as well of maybe a little bit of a flaggish type pattern over here? A little bit of a sideways range. It reminds me actually more of a classic Elliott wave, kind of an impulse ABC pullback in the direction of a very, very strong trend. Now, the last flag that we saw over here was actually really quite successful, and it came post earnings. So a rally up to earnings, we held our ground, and what did we get right there? Well, I've covered it up now. You can't even see it. But I'll tell you what we got. I don't know. Let's see. I'm going to zoom in, just make a point out of this. But we got it right here. The hold strong bar right there. I used to be one of these guys, and tell me if anybody can relate to this. But I would say, hey, I'm trying to get the pullback here, but the bar was just too big. I wanted to really get it down here. I mean, I really wanted to get it down at the bottom. I mean, I had, a sense that it was going to bounce after this hammer pattern, the hammer candle. And I'm like, oh my gosh, it's virtually up another 20 points, 20 points higher right there. But that was the hold. It closed above the high of the low day, low day, low day, low day, low day, low day. Yeah, we closed above it right there. That's the close above the high of the low day right there. Sorry we had to give up this to get maybe a higher expectation, but were there good things to follow afterwards, after higher expectation? You kind of have to work through that and say, is there more in there? Or am I just going to be upset about losing my 20 points? Well, or just, not upset, but, you just say, gosh, I missed it. There were more. And that's kind of a classic hold with, and this sticks out too, like a sore thumb. Look at that volume. There was some buying in there. A lot of time you get buying in there, you can carry it up. So zoom now into the present, right? Not in hindsight, but in foresight. Close, close, lower, 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 lower. And was yesterday a low? Absolutely. Now we're getting kind of that middle bar in here. Sometimes traders will do this too. If they go above the high of the low bar, and if they start to trade above there with some force, if some force is there and you're seeing a lot of buying activity, they might not even wait for the close. They might actually, in fact, try to hit that trade a little early. Now, is there risk to that? Yeah, because it hasn't closed above there. But in doing so, what some traders could have done on a move like this is right there. See that? They could have maybe got in a little bit early because why? There was a ton of volume. So it could be an area to be looking at here. This just looked somewhat familiar, this pullback to this pullback, and it's all happening within this big upward trend still going up. If the NASDAQ is overdone that we looked at earlier, and it's due for a bounce, which it has had a tendency to do. It's a really strong upward run. In fact, let me just throw a fib on here. But if it bounces, maybe companies that have held up better, like Palo Alto could bounce even sharper if that NASDAQ is ready to go. Ooh, we're right at the 38 too. See that? We're kind of holding that upper Fibonacci level. These levels are found in nature, and a lot of traders will use them. No guarantee again, but a lot of times you will find bounces off those levels. A little bit of a gap there too as I'm looking at it. A little gappy right there, which doesn't happen all the time on the NASDAQ. It's an index after all. By the way, bigger. Okay, sometimes traders would say even a bigger number right around that 50. Okay, well, let's continue on. But that's what I wanted to show you on that pan W right there. So is there a place for maybe an alert here? I'd sure like to, I mean, I'd like to know. Let's put it in. Um, just like this. Hold, question mark. Check it intraday, taking advantage of the capabilities of the platform. Okay, how about longer term flags? Now, this is a longer term flag. You can't even see it. That's how long it is. I mean, all we're really looking at the majority of this chart is the flag, the potential flag. I mean, we're actually getting signs that it is a flag, more signs, because we're breaking above that range right now. But this over here, folks, long term, this is all flag. This is actually built on a very, very long-term pull. That's why I say it's interesting too to consider multiple time frames. That's your weekly, and what did we just do? We just took out prior high and high again. Sometimes, not every time. Right there. You'll pull back, and that is called a breakout and a retest. It's a little bit different. There's more potential strength here to this because we're talking weekly here. This was all maybe started with a strong earnings announcement too, which can be a game changer. I mean, let's put it this way. The market responded positively. I'm going to look at it right now. Did it or did it not beat expectations? It's always interesting. Yeah, 357 is what it came in at. Let's see. Where'd you put your stop on the Pan W? Oh, are you referring to me on that one? Let's see. We actually didn't we're waiting for an alert on this, but maybe a potential exit level. Yeah, in terms of a stop could be just below the prior lows right there. You might be referring to another person in the chat, but I was just going to say that just in case. We didn't put a position on yet. That was just an alert to alert us if we are developing into a close above the high to low day. Another long-term. Oh, before I go, another long-term pattern. GM. Do you want to see the flag? Just click over here if you have any of your grid charts. That is the move to the upside. Did I tell you guys there was a pull? There's a pull. It's weekly. She's a big one too. I mean, this is big. This is a big, big move. So on these weekly moves, you can have a longer sort of consolidation as well. And there are some of the indications of a break. Now, I don't know what's going on with GM. But sometimes these companies I've read, some traders will say you might get sucked up to maybe like 100 if you get past like this 90. It just like a lot of companies do. It's just interesting. We're right there. Sometimes there's resistance at that big round number at 100 as well. Let's hit one more long-term flag before we look at now some of the bottom patterns as well. But last one in terms of a flag, Cisco, you can see the potential for the flag. These are weekly. It's a different kind of a setup, but that was a powerful weekly move and there could be a follow through. Do you see the flag now? Now it's kind of a little bit weak. This rally here is actually pretty weak. We did get a close above the high to low day here. It's almost short term, almost bear flaggish, to be honest with you. Uh, you might want to wait for earnings to pass as prices come down here. I mean, perhaps, but if it comes down here, you're in this gap range, and folks, you could see a fair amount of support right there too. S for support. But that's another one. All right, now let's do this. I want to throw out, okay, just for the heck of it, here are some wild cards. CVX. Now, CVX over here, I pulled up another chart here for you guys so you can kind of see it. This is just a little script that I introduced. It's an enhanced market forecast, if in fact you guys are interested in these. But a lot of times when you see this, when you start to break above this level right here, this is oil. This is oil, and oil has been, bouncing. We don't know what's going to happen, the extent of the conflict, but some of these companies have been throwing out really good numbers with the higher oil. Just as a side note, wanted to highlight that, but when you get above this level right there, it's the standard market forecast intermediate term line, but I've got a script in here that I've developed that gives you like that dark green if you get above here, and you can spot these. Now, I have this, I've got the scan as well, just kind of a wild card. You can also see it on something like a lot of the oils. Here's Fang. Fang is hitting up in that range. We don't know. Is this a long-term sideways channel? If you get above that 80 level, and I talk about that, it is something just to be mindful of. Okay. Um, I'm gonna just post this. If you guys are interested, you very well might not be, but this is the one I had right here. It was the top of the list for this class, but this is just an enhanced uh, MF as for market forecast right there if you guys want to check it out. All right. Oh, good. Good to know. Brett had noted here for us too. I should know that the Fed rate decision will come out in about 30 minutes. Awesome. But that's good to know that. And that is very, very interesting to know because that could change the dynamics as well too. In that though, if you want to take a look at that, that does have so it has the chart and it also has the scan to find those too when they might be getting that area where you might expect extended trending to the upside. Just a thought. Okay, here let's hit cup and handle, longer term pattern. Uh, Baxter has been down for a while. A lot of times you get these longer term cup and handles, folks. Check it out right here. Look at this rounded type bottom, also known as a saucer bottom. You can see why, followed by the end of that, which is a sort of a flag pattern. And now we're breaking it out. Now, the extension of this move, since we're dealing with price patterns, you take the high of that range and you measure it off the bottom right there. And is when you break out above that, and I'm just sort of eyeballing it, but keep an eye on this too going forward here. What are we looking at? Well, about 6 points to the upside, right up and through here or so. 8 points, I'm sorry, no, 6 points to the upside. So it's somewhere possibly in here. Oh, and look at that. You're getting some prior highs right over there. Maybe it's a range, but it could, what I'm getting at is there still could be some development. But this is a very strong break right there. There it is. Earnings. Watch out for earnings. Keep that in mind. Okay. CTAS, this had sort of that inverted head and shoulders pattern. This is the potential initial start. Shoulder, head, shoulder, rally. Now, we can find some of these here too. BR, shoulder. Remember, these are bottoms. We're in our bottom pattern now. Shoulder, head, shoulder, breakout. Just like the cup and handle. The initial price projected move, you take the highs and the lows and you measure that, folks, to the upside here, right? Take the high-low range, whatever that is, and measure it on the upside breakout. And we're just on the verge here, but there are earnings as well. So now that we looked at that, a few more. BRO, long term, shoulder, head, shoulder, breaking out now. Price extension, real super quick. Here to the upside. Okay, two more and we're done. We're out of time. But let's see. Good. Dominoes, kind of an interesting one. Shoulder, head, shoulder, maybe on the verge of breaking out. It's been out for a while. Island reversal. This was brought up in the chat yesterday. Gap down, gap down. There's your island. The high range, high to low, measured off that break right there. So somewhere back in that range. Folks, it's been good being with you today. Thank you, Brett, for your help in the chat. And it's awesome to have all you on board and the points that you've made in the chat. Be sure to tune in every week to Rachel's class here. It has been good being with you today. Hope you have a fantastic rest of the day. Have fun with these price patterns. Take care, all.